Hello, everyone. This is Ross Carpri again with Keller Williams Metro South, coming to you today to talk some real estate. I also have Andy Gagliano with Gagliano Mortgage. He's online as well, and he's probably going to share some information with you as we go along. But we did hear on the news today that interest rates supposedly are dropping. Andy, you have to share in your segment what the rate is or whatever.
Okay.
I don't know if it came down a half a point or a full point or what. I haven't been in the news this morning, but I did hear they're coming down, and that's good. One of the things I wanted to talk about with people is, depending on your own personal situation, interest rates are very important to most of us. Okay. A lot of times people don't want to sell their home because the interest rates are high. They don't want to sell it right now. I want to wait till interest rates drop. And also, you have buyers that want to purchase a home, but I don't want to purchase right now because interest rates are a little high. But I tell people to look at your own individual situation, because let's just say you're in a situation where there's a divorce and you have to sell your home. To be honest, most sellers at that point, they just want to sell the home. They're not really as focused on interest rates as most of other people are. They just know that they need to get out from under the house and move on with their life. That's a simple thing. Also, you have situations where a spouse may have passed away and your home situation has changed. There are a lot of factors that cause people to decide if I'm going to sell my house or not. So for people to blame it on interest rates is really not fair, because there are other factors involved. In the situation, if a spouse passes away, most of the time the remaining spouse probably wants to move to get to start over, or to just not have to change the memories that they have that'll never be erased. There's a lot of factors. So, but in today's time, interest rates are important. They're important to everyone, but I still believe that your personal factors makes a difference in whether you're going to sell your house or not, or whether you're going to purchase a house or not. So that's one of the things we want to try to stress. We'll look at each individual situation. You can give me a call. We'll sit down. We'll talk about your own personal situation and just kind of see if it's worth it for you to move. And if that's the case, then we'll sit down and talk about what strategy we can come up with that will help us to be a smooth and easy move for you. And also, if we need to get a lender involved, we can always call on Andy. He's with Gagliano Mortgage. I'm going to bring him on now, and he can kind of share with us some of the things that he's hearing on his side of the business that affects whether the interest rates are right time to move or not.
Yeah. Thank you, Ross. I appreciate that. And so today we did, I should say the Federal Reserve lowered rates again today. And I'm going to bring up a little chart here, share my screen with everyone to kind of show, or I guess really kind of prove more or less, that the Federal Reserve does not directly affect mortgage rates. And what I mean by that, let me see if I can get this to pull up here. Let me share my screen. Okay. So this is a service I subscribe to. And if you look over to the right of that screen that popped up here, I'm going to just draw on my screen here real quick. But this chart here is
real-time chart.
Okay. Candlestick chart there. That is a current, or a snapshot of the current picture of the bond market. The
Mhm.
bond market is how mortgage rates are priced. So what you see if you're looking at this chart is you would look at this and you would say, well, this is showing that a downward trajectory here in rates, and that's good. But actually, that's not rates. Those are prices of bonds. And bonds and interest rates move in an inverse relationship. So when bond prices go up, the rates go down. So mortgage rates would come down as those bond prices go up, and vice versa. As the bond prices go down, mortgage rates go up. So what you're seeing today is this decrease in bond prices is actually an increase in mortgage rates. And let me see if I can zoom in just a little bit here. I'm not 1,000% sure how to do that on this chart here, but I'll just kind of draw the line. So the Federal Reserve made their announcement at 1 o'clock today. And I'm just going to make a little mark here at 1 o'clock on Central Time. And that is, I take that back. This is Eastern Time that you see here in this chart. So that was 2 o'clock Eastern Time that the Federal Reserve made their announcement on about federal funds rates. And if you look from this green line to the right, since the Federal Reserve lowered the federal funds rate from this time going forward, you see how much the bond market sold off, which means that's how much mortgage rates went up. So just to give people an idea on, say, $100,000 mortgage, from the time the Federal Reserve cut the federal funds rate today, the cost of that $100,000 mortgage is about $250 more expensive in closing cost, not in payment, but in closing costs than it was prior to the Federal Reserve announcement. So when people say, hey, this is not or say, well, the Federal Reserve lowered rates today, so mortgage rates are lower. Well, let's come back out just a little bit here. I'm going to have to bounce over into this other screen.
No, and not to interrupt you, but I'm glad you brought that up about 200 or so dollars, I think you said, in closing costs or whatever, because most people are really just interested in the mortgage, the house payment.
That's true.
So show, if you can, kind of illustrate the difference in mortgage payments based on 100,000 old rate and new rate, just to give them an idea. I think that's what people, most of the time, they measure their situation by.
Yeah, and that's the thing. I was going to show this just very quickly. This is a 1 month chart of the bond market. And so you see bond prices going up, which means mortgage rates have gone down over the last month. But then come over here and look at today, and you see where bond prices are and where rates are going with the Federal Reserve announcement. So just to go back and talk a little bit about what Ross was saying, this, when we see something like 0.25% cut in the Fed funds rate, let's say that on that day that happened, that ended up equaling 1/4 of a discount point decrease in mortgage rates. That would be a point for point decrease. So the Federal Reserve cut rates 0.25%. That's 1/4 of one discount point decrease in mortgage rates if the rates followed the Federal Reserve directly. So what does that mean? It means just that for the same exact interest rate today, Let's say you were looking to buy something today, Ross. You called me this morning and you said, hey, I want to know what a rate is as of right now. And I quoted you a 6% interest rate on a 30-year fixed, which is pretty darn close to what they are as of this moment. If I quoted you that with no points, meaning no origination fee, no discount point, then if I quoted you that this morning, then this afternoon, that same rate would cost a quarter of a discount point to get. And a discount point is 1% of the loan amount. So if you're borrowing $300,000, 1% of $300,000 is $3,000. That is what one discount point costs. Now, I said the rate this afternoon would be a quarter of a discount point more expensive to get that same 6% interest rate than it was this morning. So excuse me, 1/4 of 1% or 1/4 of 300, I'm sorry, 1/4 of 1% of $300,000. I made that really confusing. Is $750. So to get that same 6% interest rate this afternoon, it would cost you $750 more in closing cost this afternoon as it would have cost you this morning.
Right.
And so that's really what it boils down to, and people think, well, the interest rates should be 1/4% lower because the Federal Reserve lowered rates by 1/4%. That is not how it works at all. So, and we're talking about the cost to get a specific interest rate, more so than just talking about what that specific interest rate does or what you can get it for. So that's really kind of what we're looking at, how the Federal Reserve affects rates. So they lowered their rates. That's the rates that banks charge each other on overnight loans. Those are the rates that the Federal Reserve charges banks on overnight loans. But when they did that, Fed Chairman Powell came out and said, well, I'm not so sure about a December rate cut. We just have to wait and see. Well, oddly enough, that's the same thing he said when they lowered rates in September,
right,
about an October rate cut.
right.
That's the same thing that he was saying prior to September was, I don't know if we're going to lower rates at the next meeting or not. We just have to see how things go.
Right.
Well, no, here's my thoughts on this. And I'm not an expert, but on some days I think I have some common sense. My wife would probably tell you differently.
Right.
But here's the thing. If Fed Chairman Powell thought the Fed was going to lower rates in December, and they lowered rates by 1/4% today, and he thought they were going to lower rates in December by 1/4%, why wouldn't he just lower rates by half of a percent?
That makes too much sense. That's too logical. You know that. That's too logical.
So
I agree.
Obviously, he's speaking the truth. We don't know what's going to happen in December. We want to see the news and how the economy's doing and that kind of thing.
The tariffs have kind of become a back burner, but then you got, this shutdown, and that's affecting people, and how many people are going to be laid off, and you got Christmas coming up and Thanksgiving coming up.
Yep.
Which is typically the buying time of season for people, and a lot of that's going to have an effect. So he probably just doesn't want to go out on a limb, and because if he says that, then people are going to expect that, and I don't think he wants to portray that. So
right,
it's a wait and see thing, and I think again we go back to the situation. whatever your situation is really more important, I think, than what the economy is really doing. Because the economy is going to do what it does, whether you have to sell your house or not.
True.
And if you're in a situation where you have to get your house sold to either purchase something smaller, maybe you're downsizing, maybe this home is too big for you or whatever, that's going to happen no matter what. So I think the thing is, as I said before, if you're thinking about doing something like that, get with me. Let's talk about it. Let's talk about your situation. And then we can look at the market value of your home. We can look at how fast homes are selling in your area. And then we need to get an expert lender opinion involved. Give Andy a call. We'll get him together as well. And we'll try to do what we need to do to plan out your strategy for moving. So I think that's the wise thing to do because, again, just like he said, he doesn't really know what's going to happen. And no one does.
Very true. Very true. And, if someone wants to have a conversation, or someone thinks, hey, I'm going to do something soon, that can be 6 months, that could be 12 months down the line, but I'm going to do something at some point. I'm going to buy my first house. It's not too soon to have a conversation.
Sure.
And we can look at things. We can start planning, get you in a position so that maybe we look at your financial situation and we, after looking at the whole picture, say, well, you can do these 1, 2, 3 things and get yourself in a position to get a better interest rate in 3 months or 6 months down the line when you do get ready to buy.
Right.
So it's never too early to go ahead and start having conversations. Just because you're having a conversation is makes you the same as Jerome Powell. It doesn't commit you to do anything.
Right. Right.
And so it's just smart planning, and it's a smart business decision to make. And so, yeah, I'm happy to help out with any of that. And, just if someone's got questions, they can reach out and we can talk and try to figure out a good game plan.
Good deal. And again, my number is 205 601 0123. I'm going to let Andy give you his contact information, and either one of us can help you at any time.
Yeah, I can be reached at 205-979-4412. I'm at extension 1.
Perfect. All right, Andy. Well, thank you so much again, friend. And we'll get together next week and see what we can come up with.
Sounds like a plan. Thank you, Ross. Have a great week.
You do the same.
All right. Goodbye.